not often an issue, because on the US side, you're not going to necessarily, especially if you're a Canadian resident, pay tax on your capital gains in the US. So much more of a Canadian-centric issue for sure. Okay, question number 3. I've inherited an IRA from my late mother. Should I cash it out? Okay, we get this a lot because we really help clients a lot with inheritance. A lot of the answers to these questions really do depend on the size of the IRA. So I would say if you inherited an IRA that's $10,000-$15,000, especially if your income's quite low, it might just make sense to cash it out, bring it up to Canada, maybe put it in your TFSA, or use it to pay down debt, whatever you might need to do. If you inherit a sizable IRA, something over 200,000, and we've seen this in the last couple of years where clients are inheriting pretty significant IRAs, I certainly would not think about cashing that out, especially initially, because what you'll be able to do, you'll be able to actually defer the taxation of that IRA for 10 years. So the idea is if you cash it out, you're going to pay, not only are you going to pay US tax, you're going to pay Canadian tax, which is much more relevant because the Canadian tax rate is going to be much higher. So let's use an example. Let's say you have a $100,000 IRA, you cash out, your marginal tax rate in Canada is 30%. So you're going to pay $30,000 of tax on that withdrawal. If you don't need the money, it doesn't make a lot of sense to pull the money out. You want to continue deferring that over 10 years. Hopefully you get to a point in the 10 years where you can actually start withdrawing that at a much lower rate. So if let's say you're working currently, your average rate is 30%, but you're going to be retired in a little bit. In retirement, let's say your tax rate drops to 10%. That's a 20% differential on the $100,000, $20,000 of tax savings. So definitely would not recommend just withdrawing money from the IRA just because you've inherited it. You can have it deferred for the 10 years, and then in most cases save a bunch of tax for sure. Okay. Once again, very general comments. I mean, we really want to plan for these IRAs when they come through, but for purposes of this conversation, that's maybe a good idea.